Byron, I'm going to zero in this morning on the T in Mount Sass, Twilio, because the Journal reporting that they might be close to investing as much as $700 million in Cineverse Technologies, which might be coming public as well. Does that fit into your thesis around why these types of companies and kind of the pond in which they're swimming is where you ought to be fishing?
Great to be back. Thanks for having me on. I'm still an active board member at Twilio, so I can't comment directly on the speculation, but I will say that the market size represented in communications is exactly why they're included in Mount Sass. When you look at the broad telephony, SMS, video, and voice communication that you see out there, these are essentially multi-$100 billion markets that Twilio is attacking. And like a lot of companies, they were net COVID beneficiaries, where collaboration and communications is an essential part of the distributed workforce and the work from home environment. And Twilio has certainly been a beneficiary of that over the last year plus.
Now, the bifurcation between the overall market and the Main Street economy is even more intense when you look at stocks like the ones that you're focusing on and the Main Street economy. And that all seems to come together in what President Biden seems to be alluding to when he's talking about this potential labor action and organizing in Alabama. You got to think of Amazon when he says that. Do you expect that these sorts of labor worker Main Street issues are eventually going to become a drag on some of these stocks?
So I think that technology has been a fantastic net job creator in the market. And there's a separate discussion around how they're taking advantage of that power at large scale. And I think there's some validity in some of those discussions. But overall, if you step back and look at what are the growth drivers of the economy, you're seeing that across all stages and scales of technology, that's what's leading to GDP growth, that's what's leading to wage growth, and that's what's leading to overall net new employment. And so I hope that the narrative focuses on where the economy's headed and where these companies can bring it. And you see that from the private companies, including many in our venture portfolio that are adding thousands of jobs, up to the leaders in Mount Sass that are the flag bearers for the new economy. And they absolutely are in expansion mode and job creation mode for U.S. citizens.
But Byron, talking about those public companies and looking at today's rally, so many of the stocks that are part of Mount Sass have seen such massive gains over the past 12 months. And yes, there are these trends that are going to continue. But how do you think about valuation, and where are there untapped opportunities where maybe they haven't seen such significant gains over the past year?
Well, most of the valuation run-up has been because of fundamental business metric improvement. These companies are growing at massive scale while on balance generating free cash flow. If you look at the 53 companies in the cloud index, you see that they're growing on balance over 40% and they're generating meaningful net free cash flow. That's why you've seen the corresponding multiple expansion. So there's been this double whammy where they're beating expectations and guiding up. Plus, then people are forecasting in the out years that these trends will continue. And so the overall valuation uplift does have these companies trading at north of 20x run rate revenue right now. But when you look at alternatives, putting them in bonds or low single digit earners versus the flag bearers for the new economy and these hyper growth engines, people time and time again are looking back for growth and opportunity for the new economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.